Welcome everybody to the Building Equity Podcast. I'm James Schlimmer here for our foreclosure report that looks back at November 2023. Once again, we're going to have Auction.com's Darren Bloomquist join us, who's fantastic. Listen, to start, our disclaimer. Got to do it. We're not giving you any financial advice. This is strictly educational, and that's that. Today's show is brought to you by IRA Title Pro. If you're buying and selling real estate with your IRA, you should try closing with IRA Title Pro. Visit them at iratitlepro.com. You're going to be very happy. Leave it. And finally, as always, if you enjoy this real estate content and want more, click subscribe on the Building Equity Podcast. We'd be happy to get it to you. And listen, let's get to Darren and talk about the latest foreclosure information. Not November 23, November 22's update. I'm an idiot. Let's get to it. Welcome back, everybody, to the Building Equity Podcast. And once again, I am here with what I call the wizard of foreclosure information throughout the United States. But Mr. Darren Bloomquist, thank you so much for being with us again. And if you didn't watch last month's episode, Darren is the VP of Market Economics at Auction.com. Darren, welcome back here as we close out 2022. How are you?
I'm doing great. Thanks for having me again.
Awesome. So listen, I want to dive right in because you created an article. I love your articles. As long as you know there's probably one person out there in the country that's reading your articles. And
yeah,
and
you might be the only one.
I may be the only person, right? But I'm going to try to bring it up on the screen here. You can see it. Foreclosures could spike if dire predictions come true. And as we get ready to close out the year, my hope is, number one, everybody should go read this. It's a very quick read. It'll take you 5 minutes. I think Darren does a wonderful job of breaking down probably the 3 different areas that could increase the foreclosure market. Not could, that will. It's just a matter of how impactful it will be. But I was wondering if you, I want to hit you right out of the gate. What are you seeing? What are you thinking? And can you give a kind of a recap of this article for us?
Sure. And by the way, the editors love to make things dramatic. So that headline is not my original headline. Mine was just foreclosure outlook for 2023, which I have to admit, that's a better headline. But I think, what we're looking at is 2 converging trends is what I talked about there in terms of where we're going to see volume come from when it comes to foreclosures in 2023. The first trend is the backlog from the pandemic. So those are properties that probably would have been foreclosed on if the pandemic hadn't happened, we hadn't had the foreclosure moratorium. We would have seen these properties foreclosed on anyway, type of thing. And so that's one piece of it, that backlog. And then the second piece is really the emerging distress that we're starting to see that would result from kind of 2 things. So that the second piece is a 2-headed monster, which is the emerging distress that would come from if we have a recession
Sure.
in 2023, and then on top, kind of layered on top of that, if on top of a recession we have a housing downturn, or it could be some combination of those. We have a housing correction where home prices go down, and not a recession, or we have both at the same time. Anyway, that's the other driver of volume in 2023. Now, I would say that second driver of volume is less likely to hit early in 23. It'll more be late in 23 and maybe into 24. But that's really where we're. And then we can talk about specifics. That's the high level theory, thesis of the article, but I can talk about actual numbers coming out of that. And that, to be honest, the numbers might have changed a little bit since the article was written, but it's the same basic idea.
Yeah, I mean, I can look at your summary where you're saying, hey, anywhere from about 175,000 foreclosures, and I think the term was it could swell to 278. Should home prices drop, should the unemployment hit the 6%, and then the backlog of the pandemic, the backlog of the pandemic foreclosures, and the Black Knight data showing the 480,000 delinquencies. Is that correct? Or
that's right? Yeah, and I would say, and that those numbers are what we actually, there's a model that we have, a regression model that we plug things into, and that's that 175,000 all the way up to 278,000. That those numbers, that's what the model spits out. The only caution I would say is that because of all of the government intervention, some of that volume could be pushed into 24, not just end up in 23. It's kind of like when you're, in your economics class, they talk about the lags. The model tells you if there was no friction in the market, if everything just happened kind of as efficiently as you might expect it to, you would end up with potentially up to 278,000 foreclosures. But because we know that there's lags in some of this stuff and there's intervention on the part of the government, some of that volume might be pushed into 24 as well. So that's just to nuance it a little bit. But yes, that's right. That the model is telling us if we kind of have this soft landing, that's still, I think, possibly on the table, and some people believe it could happen. That would generate 175,000 foreclosures, and then if we had the combination of a housing downturn, not necessarily a huge housing downturn,
Sure,
and a recession, that could swell the numbers up to 278,000. I would say, and I should let you ask questions here, but to provide some context on that, in 2019, the first year before the pandemic, the last year before the pandemic, we had 206,000. So it would be right in that. It would be in that range if we ended up in that 175 to 278.
Whereas in
number.
2010, there was a million.
Right. Yes.
Right. So just perspective, again, foreclosures are bad. We don't want foreclosures, but this is a podcast for real estate investors. This is a interesting area to be able to make some good return on investment. So I appreciate you saying that. I like how your editors changed the headline because it's more clickable. But we're talking about, I agree with you. I know we touched on it on our last episode where it was like, hey, when that equity moves down, the pricing, how many folks are upside down on their property? So many people purchased. There's going to be a certain number of delinquencies. There's going to be opportunities for investors to make some money. Now, let me ask you this, which is kind of out of
and
left
I would
field.
say, I would add one thing here is there'll be more opportunity, but putting these numbers in context, it's not like it's the foreclosures. It's a scenario, even with the 278,000, which is a high scenario, you're not going to tank the housing market because of foreclosures. It's not going to be that million that really became a problem of its own back in 2010. This is volume that is an opportunity for investors, but it's not a self-fulfilling kind of storm that brings down the rest of the housing market.
I 100% agree with you. One thing I want to talk on, and then I want to take you through our numbers and just see if you had any analysis or commentary on at least what we're seeing throughout the country from the national level. Florida and Hurricane Ian, and specifically when it comes to insurance premiums. And this is just a conceptual thesis that I'm looking at here. But I live in Florida. I have a house. I can tell you that my insurance premiums have increased 200% in the last 2 years. I know that 6 of the major homeowners insurance carriers have left the state of Florida before Hurricane Ian. And now Hurricane Ian hits. I can tell you that of the 400,000 homes that were damaged in Lee County, Florida, about a quarter of those, or 100,000, were short-term rentals. But specifically, if you have a mortgage, you're required to pay a homeowner's insurance premium. And if these premiums increase to the point where people can't pay them, you run the risk of foreclosure. Or delinquency of some, or forced insurance and a backlog, and you just start getting behind. Do you guys follow any of that? So any of the escrow items that are part of the mortgage payment? Because I think specifically in Florida, that homeowners insurance premium could run the risk where delinquencies increase, and that kind of starts the domino effect here, if you get my drift.
Yeah, we don't track that specifically in our own data, but certainly that is a factor we look at. I mean, I think property taxes will be an emerging factor that could trigger foreclosures as well. It's one of those costs of home ownership items like insurance that is a little bit unpredictable and people often don't think of. They think, oh, I can make the mortgage payment. But if that property tax goes up or if that insurance premium goes up, that is a trigger that, especially if it goes up dramatically, certainly a trigger that could raise the cost of home ownership and make it so more people cannot afford to make that monthly payment, or to cover the cost of home ownership. So yeah, I think, and certainly if you look at some of the early data, there does seem to be an impact in Florida. The Black Knight data indicates there was a jump in defaults in nationwide, but specifically it did seem to be centered in Florida coming out of the hurricane, which is really expected. You see that out of the natural disasters typically, unfortunately. So yeah, that's something we're looking at, kind of on top of everything else going on in the macroeconomic. Yeah.
All right. So let me hop over here. You're going to see on the screen, we're going to move over to our IRA Title Pro foreclosure dashboard. What you're looking at here, Darren, are foreclosure starts. And when we say foreclosure starts, you were gracious enough to educate me about the 20 additional states that skip the list pendants and notice the default process, go directly to the sale. So I had our site updated. So what we're looking at here are what we call industry foreclosure starts. And that includes the 20 states with the NFS.
Awesome.
So my numbers are a little bit more accurate here. But what I want to be able to do very quickly is hit, from a volume standpoint, we saw roughly 20,243 starts in the month of November, which is a small decrease from the 21,000 before. And just get a feel for, at least when it comes to industry foreclosure starts, do you have any commentary? I'm going to point out two things that my hope is they wet your whistle and you're like, oh, that's right, we're looking at this stuff. And if not, no big deal. But obviously, when we're looking at everything from a pure volume standpoint, your Californias, your Texases, your Floridas, your New York, your big states are always going to tell the story from a volume standpoint. But what really interests me about this is when I start looking at per thousand homes. And when I flip the switch from a foreclosure start standpoint, at least last month, we see the story about Wyoming. And then I'm like, geez, what's going on in Wyoming here? And you can see we had about 69 foreclosure starts, whereas in October there was 12. Year to date, there's been about 327. Now, from a year-to-date standpoint in foreclosure starts, just to say, geez, this is what's happening here, it looks like Illinois is leading the pack per thousand homes. So if I would take my little map and just look at my little heat map to zoom in here, you can kind of see, here's our Wyoming, our red for the previous month, for the month of November. But there's some little other areas that we're looking at. North Dakota is having some activity. Comparatively speaking, per thousand homes, of course. You've got your Wisconsins. These are states that I think are normally like hidden under the radar because the narrative is of Florida, Texas, New York, so forth. But I'll shut up there and let you do your job and see if kind of what you're seeing, if this tells the story or so forth of what to look out for start-wise.
Yeah, I think, what stands out to me there is really Illinois does stand out. We could talk. Well, I will get to Wyoming and some states like that too. But the Illinois and Georgia. Well, Illinois and Georgia there stand out because those are relatively pretty high volume states. But then also, to your point, this is really a better way of looking at it in some ways, in terms of really seeing what is changing, or what is what the volume is per capita, or some type of rate of the volume as opposed to just the overall volume. So to me, the combination of the high volume in Illinois and in Georgia, and the higher rate of foreclosure starts, is that tells me those are areas where the opportunity is emerging, not only on just a volume basis, but on a rate basis. Oklahoma also is. I was looking at our own heat map of where we're seeing foreclosure, kind of the next step, properties actually brought to foreclosure auction. That's kind of the next step after foreclosure start. And we see, what I did is I compared to the pre-pandemic levels, just
Okay.
the benchmark of the third quarter of 2019. Where are we compared to that? Because if you look at the year over year numbers, they're almost always going to be up because we were at such a low level yesterday, or
Last year. Yep.
last year. So anyway, by that measurement, when I look at Illinois, it's not quite telling that same story. It's still at 43% of its pre-pandemic volume. So even though the starts are ramping up there, you are not seeing as many go to foreclosure auction. When I look at Georgia, it's kind of in the same spot. It's at 45% of pre-pandemic levels. But then I look at Oklahoma, it's at 91%. So it's almost back to pre-pandemic levels. And then I look at Wyoming, and it's at 103% of pre-pandemic levels. So it's actually above pre-pandemic levels. And some of those states, the states where we're seeing the numbers return the quickest, do tend to be actually through the Midwest, and especially the upper Midwest. So you look at Minnesota's at 95%. Actually, one that stands out is Colorado. It's at, now, this number is a little bit maybe deceptive, but it's at 269% of its pre-pandemic levels. So that one definitely stands out. But the issue there with almost all of those states, they're fairly low volume, and so the percentages, you have to put those in context. But I think there's a combination of situations where those markets were actually, some of those markets were recipients of the pandemic housing boom, were benefited from the pandemic housing boom. And also they tend to have faster foreclosure processes, so things are moving through the system faster. So you have in Oklahoma, actually a lot of people moved to Oklahoma, and that market experienced a bit of a boom during the pandemic. And Colorado and even Wyoming were popular spots for, getting out of the city, buying that home in the Rocky Mountains type of thing. The boom, what they called the Zoom towns. I think so that may have, some of that is the dynamic going on there.
There's no question, at least I believe there is no other content online that's going to get this granular into foreclosure data, which is the most boring, not sexy conversation. Now, granted, we had a lot of folks watch our last show, so
let's make it sexy here.
The buzzwords are 269% change in foreclosures. Those are the clickable things. But when you really dive into it is where the story is. So what we're looking at here on the screen, these are foreclosures that are brought to sale. So the notice for sale, notice of transaction sale. Let's take a look at, when I switch over to per thousand, if that tells the story with Wyoming and Georgia, Alabama, Michigan. You mentioned the Minnesota, but you're doing the Minnesota based on the pre-pandemic levels, so that's not going to be based on my calculation here. But I do see, Georgia, Michigan, Arizona, Texas, Colorado, Alabama is in the running for year-to-date foreclosure sales. Now, the other thing that we're doing, Darren, too, it should be within a couple weeks. Folks that are listening, and if you're an equity trust account holder, you can visit IRA Title Pro. You can sign up for your state-specific report that we'll send you, and you're going to have the ability very quickly to come over here, and you can drill in to your zip code if you want. So with a very quick of a button here, we can go down to a zip code level and be able to get the information for what's actually happening. So when you do see, hey, this many notice of sales in a certain state, well, you may want to know what county that is. Well, you may want to be able to know now you want to go to the clerk of courts and look that stuff up online if the data is a month old, which is ours is. But maybe you want to go into a certain zip code. So it all depends what folks are interested in. That's what we're trying to do.
This is
And get,
yeah, this is great information. I mean, really good detail. And yeah, I would propose the other action item they could do is, yeah, if they see a market that they actually want to possibly buy in, they can go to auction.com, and we have the properties that are up for sale. Certainly, I think the common denominator I see with a lot of those states there that you had, especially with the notice of sales,
I'll
when
pop it
you
up
had
there.
that,
Yep.
is again that they experienced a bit of a boom during the pandemic. A lot of people moved there. Prices were pushed up, and they also have very quick foreclosure processes. So the properties can make it to foreclosure auction pretry quickly. And so I
Interesting.
think that's where you're seeing
That's a
that
really good
combination, and
perspective.
that's where the opportunity emerges maybe first. Alabama certainly falls into that. We actually see quite a bit of volume in Alabama, and that was an area, believe it or not, kind of like Oklahoma, people were moving to. Prices were getting pushed up during the pandemic.
Well, we know year to date in Alabama, there's been 151,872 properties that have been listed for sale via foreclosure. So let's take a look if we head over to the REO world. And once that makes the change, we can look at from a volume standpoint, how many properties were purchased by the bank last month throughout the entire country. And I believe we looked at about 3,700, almost 3,800 throughout the country. Those numbers should hold true to what you saw, Darren. And obviously, we can see here Illinois, New York, Pennsylvania from just pure volume counts, Michigan. But let's take a look at per thousand homes and see if it tells a different story. And it always does, and it's always interesting. What we can also
Mm-hmm.
do too is I could show you too at the state level, we actually take it into the counties. And some of the counties in Florida, you would never think that are seeing an increase in foreclosures. You just never know to look, in my opinion. But here's your Wyoming again, Illinois, Indiana, Arkansas.
Mm-hmm.
Interesting.
Yeah, and I think, one thing I'd point out, Illinois doesn't fit into this, and maybe not Wyoming as much, but certainly when you look at the Alabamas of the world, the Arkansas of the world, and even the Oklahomas, you have, I see a great opportunity there because you've had this little bit of a boom. I would describe it probably as a mini boom bust scenario going on in those markets, but the long-term fundamentals of those markets are still very solid because you have population growth, and people love the Southeast. People are moving to the Southeast, and they were before the pandemic, and they still are. And so, as in terms of a long-term real estate investment thesis, those are good markets to go into. And right now, there's this window of opportunity where some of the distressed buying opportunities are increasing.
I'd like to just point out that I need to go back to geography class because state abbreviation AK is Alaska, not
Oh,
Arkansas.
I saw
Right.
Arkansas there in the. I did see Arkansas on um, the one of the other ones that you were looking at. I think the notice of sales. But yeah,
Well,
Alaska is maybe a little different.
Alaska's a little bit different. So let me ask you
Yeah.
this and get your take. This, if we were to look at the year-to-date chart each month of bank-owned properties, we started the year strong, 4,700, almost 4,800 REO purchases throughout the country. The whole year from there, it dropped. I mean, we were close in the month of March, we got back to it, but we haven't been anywhere near that the rest of the year. Are these pandemic kind of holds that made their way through and then we just have not been able to get all the way through the process again? How come we're not seeing those levels like we saw in January?
Yeah, that is interesting. And I'm not 100% sure why, but I think my guess would be that that actually was, well, December was when the foreclosure moratorium was over, officially over, really. And so there could have been an initial surge there as some of the properties that were some of the properties that were really just primed for foreclosures got pushed through, and they were only being held back by the moratorium. They were pushed through, and so you saw that initial surge, and the numbers have come back down. You are seeing them trend up here, it looks like, and we are seeing that as well, because the other thing you had early in the year is you had, when properties went to foreclosure auction, there was a very high sales rate. So a high percentage of properties that went to foreclosure auction did not go back to the bank as REO. They were sold to investors, because investors, at least through June, were very confident in the market, but they started pulling back around that time frame where you start to see the REO volume come back up again. And so it could be part of that is investors at the foreclosure auction are getting a little more cautious, and so you see more of those properties go REO.
That makes a lot of sense. That's actually a great explanation. So if somebody was looking here and say, geez, why was January so high? There's high confidence level that there were a lot of properties that were held back. They were later in the stage of the foreclosure process and then forced to stop is probably one thing, right? So they couldn't even move any further. And then when the moratorium was lifted, they were already towards the end. So they were able to flush out.
Yep.
And then what you're looking at here is you had a lot of investors purchasing the properties at foreclosure auction, and we're starting to see that come. It's just interesting here. This January, February, March is an interesting
story. There's a lot
of
volatility. I think, with the public record data too, which is what you're using, which is great. But there is, one challenge with that can be that there's a little bit of a lag, in different jurisdictions record the data at different paces, different rates. And so especially when you have a big shift in kind of the direction of things, you can see some volatility like that as different states are recording the data at different rates, different timelines.
So if I had to put you on the spot here and say, hey, 3 states to keep an eye on in 2023, and we can timestamp this and see if you're right or wrong and go from there, what would you say from a foreclosure standpoint, 3 states that our investors should be looking at?
Well, I would say from a volume standpoint, and a combination of volume and opportunity, I would say, man, you are putting me on the spot.
I know.
But I would actually say Georgia. I would put that in there. And then I would say, let's see, what's my second one? I think actually Alabama. Those two, two right next to each other there. I would say are still good opportunities where volume is returning. And number 3, I'm gonna have to stick. You know what? I'll move a little bit. I'll say Indiana, Georgia.
That's a really interesting one. Yeah.
Georgia, Alabama, and Indiana, which are all kind of in that range there. But I see the combination of some volume returning there, and also those are really solid states in terms of just long-term investing fundamentals.
So I'm going to cheat and say Illinois, Florida, and Wyoming is what I'm going with.
Okay.
At least so we can have my picks. There's no really right or wrong way here that we'll figure it out. But one, I want to be able to just say, Darren, thank you for joining here. We went through just taking our folks through. My goal is to try to very quickly get folks through the latest month's data, see if there's any trends, talk about them. If you're gracious enough to join us next month, I would welcome that and appreciate it. And if we see anything, I think to recap very quickly what you talked about for 2023, unemployment is something to watch, clearly, as always. If that shoots up to the 6%, that could increase foreclosures. The backlog of moratorium, the just recessionary issues that could happen, and price decreases in homes. You're thinking anywhere from 175 to 278,000. I say 200 and up, just based on these conditions. I think I'm full blown recession next year, like majority of everybody else believes. But we're gonna be here and we'll be able to report the news. So
Yeah,
thank
I
you
love it.
so
And
much.
I love coming on because you present the data in a way that is really easy to really go through. So it's great for me to be able to look at the data, to be honest, and through a different lens and through a great way that visualization that you've set up there. So it's awesome.
And everybody check out auction.com, because as Darren mentioned just about 5 minutes ago, a very quick, simple way to see kind of foreclosure activity in your state is to just go to auction.com, and you're going to be able to see kind of what's happening, and you can map that out yourself. They make it quick and simple. So listen, Darren, thank you so much. And hopefully we'll get a chance. Merry Christmas, Happy New Year, and we're going to see you next month.
Thanks, James. Same to you.